Good day, traders. The 4-step method to high performance trading and the free audio program, the 7-step daily routine for high performance traders, are both free downloads to help you develop the skill set, the mindset, the discipline to master the markets. The link is down below in the box, the description box. They're both free downloads. Let's get started. Good day, traders. Stacey Burke from Stacey Burke Trading. Today what we'll do is a series of short videos to go through the process in each one of the major pairs and gold, oil, and indexes to simplify things, and just instead of trying to do it all in one longer video, I'll try and do this in smaller bits so traders can review and see the different variations of the setups on the different instruments over the course of the week. A lot of fantastic questions. A lot of great opportunities. We had a lot of major red news on the calendar this week. And when that is the case, it's always important to remember to step back for the larger picture, because starting from day one, still some confusion from a lot of people regarding the day count. And just to reinforce, when you come to the screen on a Monday, it's a new week, it's a new template. But you can be inside of a larger 3-day cycle, 3-day breakouts. You can be inside of a high and low of a previous week. You might break out of a previous high and low from a previous week, or a month, or as we saw in gold this week, the year. The year, the month, the week, all in once. But the opening range and initial balance on page 26, go and read that again. It is so important to understand the opening range, because the opening range defines what will happen the rest of the week. You can get false breaks of the opening range. You can get an opening range breakout, as we saw in the pound yen. We're going to go through different examples, but a lot of traders are emailing me questions about concepts and stuff that I never ever mention or talk about, which I have no idea. And again, I reinforce, we are not trying to buy the low and sell the high because it's down low or up high. We need to have a best trade setup. Buying the low in a broken down market will blow your account out. Selling the high in a market that is on the front side still, in a strong trend, will blow your account out. That is so important to understand. And I'll keep repeating this every single video. Every trade is either a pump and a dump or a dump and a pump. Doesn't matter how it presents. I can guarantee you show me one trade that isn't, and I will show you something that is not a trade setup. Everything pumps and dumps, whether it's 25 to 50 pips in a down move, as we saw in gold, a broken down market in the U.S. session. New York session, low-hanging fruit after a 50 pip pullback that went into consolidation. 50 pips from the low, consolidation, New York open, 100 pip drop. So everything is a pump and a dump, or a dump and a pump. Okay, and I'll also reinforce the inside day is a very specific trade setup, but it is also part of the day count. Nowhere ever have I said that if you get an inside bar, that's a reset. Never, ever. A reset is something completely different. If you're in a 3-day model and you don't get a 3-day setup and you get trap volume that continues to move in the same direction, now we have a new day count because we have a reset. The inside day is a separate entity all by itself, involving false breaks and trend trades. Very critical. That does not affect the day count. In fact, the inside day, as are all these days, are trigger days for signals. They are signal days. So I've joked a bit saying that if you can count to 3, you can make a lot of money. That's actually not a joke. That is the truth. But if you're trying to trade something on a 3rd day and there's no trade setup, that doesn't necessarily mean that, the system doesn't work. It means that you're looking at a pair that doesn't have a trade setup. So coming back to the beginning of this week, we have our Monday, our day 1, and we are inside the high and the low of the previous week. So we have a breakout on the previous Thursday. Wednesday night broke down and reversed on the Thursday. That reversal forms a breakout that failed. That breakout stayed. That was the first green day. That breakout failed on Friday going into the close of the week. And Monday, which is our opening range and our new week, which starts a new template for the week, begins our day count inside. That's day 3, except that it closed higher. That is a reset. Notice on day 1, we have a peak formation below on a day 3 that continued in the direction of our original false break. False break, consolidation, continuation, day 1, day 2, day 3. We trade back to the high of the week. The high and low of the day, the high and low of the week take precedent over everything else in the timing window if there is a setup. But something to pay attention to is that this little breakout on Monday, this false breakout reversal on the breakout level from Wednesday, gives us an anchor point now for the pump. We had a break in structure on the inside, a higher high, and then a lower low. That is our dump and pump on our Monday, our day 1, up into the high of the week on day 2. We take out not only the high of the previous week, but we trade up into the high from 2 weeks ago. Now, the critical thing to understand about that is that if we take and just look at that level, 92.85 approximately, we are in a 100 pip box. We're on the 3rd level of rise. We can just change that to 75. We have a market that is pumped up into our high of the week, heading into our London gap time. Now, we talked about this trade the other day. Our universal 5-minute entry criteria was met right at the open of the US session for a high of the week short trade, which dumped all the way back down. We had 3 levels of rise. I talked about this anchor point, this false break is our break in structure on the inside. That gave us 3 levels of rise for a 100 pip drop. So that was on our Tuesday. We had Monday, 3 levels of rise into Tuesday's session. Break in structure on the inside in the London gap time. We broke through. And then the little micro pump and dump. 1, 2, 3 engulfment pin hammer. We had major red news for the first bounce if traders weren't already in this trade, but this has already had a 15-minute setup prior to the news. We had closed below the low of the Asian session. And just in terms of simplicity, we talked about measured moves. We don't even need to do that, but we have 2 full expansions of that range as a potential profit target. That cleared the low of our false break reversal on Thursday and went into consolidation. Now, we talk about drawing the consolidation when we head into the new day. In the playbook, I mentioned this first red day, first green day. We draw our consolidation, we head into the next day. Why? Because that gives me my high and low as reference points to know, are they working the high, are they working the low? As many traders noticed, this was our first red day. We had a first red day after our large move down. Now, that typically is an unusual type of first red day, but it follows the premise. Pump day, and then the day that closes below the open. So we draw our consolidation, but we get a break in structure. This is the gift prior to the US FOMC report, but I don't trade the Fed. But that lower low is the break in structure for the pump up. Now, if traders were taking this, although the larger candle would have scared traders from taking this trade, but again, I would have stuck to my guns on this on a high momentum impact news. After the news, this is after the Fed report is released and we have our 5-minute universal entry criteria met, it would be a max stop loss of 20 pips if you were trading the news. So again, our setup is for a high of day sell setup after first red day. We hit the high, they pull it back, they work the high again and engulf it for our M structure for our 5-minute universal entry criteria. That now forms our day 2, the high of the week breakout of Friday's high on Monday. That breakout has now failed on day 2, which is Tuesday. That now forms our day 1 for the countdown. Day 1, first red day. Day 2 continues the move. We break out of the low of the week from 2 weeks ago. Week 1, week 2, week 3, interestingly enough. That market then goes into consolidation and makes a lower low. It breaks the low of the previous day as well as the low of the week and goes into consolidation. We have a market that we draw our high and low heading into the close. We have the low of the day and the most recent peak formation high. This is a 15-minute chart. Asia makes a lower high And when the session opens, we have a peak formation lower high again. That lower high is broken out of in the London session. They make a higher low. They then proceed to make a higher high. That is the formula, the break in structure on the inside. Higher high, higher low, break of structure for the dump and pump. So we have a market that's broken out of the low of the previous 2 weeks. We've taken out the low of the previous day. We've had a break in structure on the inside. Our universal entry criteria on the 5-minute is met right at the end of the first hour. Now you'll also notice we're underneath of a 100 pip box, a new 100 pip box. That new 100 pip box gave traders an easy 25 pips if they were taking this trade. Again, I'm not suggesting that it's a textbook perfect opportunity, but we're going through the process. This market took an easy 25 pips and by all accounts will now close as a first green day. First green day, and we have non-farm payrolls tomorrow. First green day is a buy low, low of the day, low of the session buying opportunity. Now tomorrow is non-farm payrolls, and I have no idea what this market could do. It could come down and take out the low of the week, the low of the month, or it could push up and give a break of the high of the day and work the high of the day. So again, traders need to understand if they work the high of the day and they pull it back going into payrolls and they're working the high of the day, this market could then at some point prior to payrolls have a break in structure, work the high of the day, and it could rifle down through the low of the week. It could also come back into our strike zone. Again, the strike zone is measured from the high of the day on a first green day and give us some sort of triple bottom. Perhaps, I have no idea. It may just be in consolidation. It may give us a perfect opportunity for a first bounce headed back to shorts from the day one shorts at the high of the week. I have no idea. My job is not to predict. My job is not to be the know-all crystal ball reading trading guru. My job is to come to the screen and look to see which pair has the best setup. And if I can't see something that stands out that's obvious, go to the next pair until I see something that looks obvious. And if it takes that first hour, or if it takes the 3 sessions to set up properly in that first hour heading into payrolls and an explosive move, if is it low of the week to high of the week, is it high of the day to low of the week, I'm not sure what it could be, but my job is to look for the best setups, not to try and curve fit my ideas to one instrument or one pair. Look for the best setups, look for the easy money, keep it simple, stay focused, stay disciplined, stick to the big picture, understand the templates, stick to the best trading setups. We'll see you in the next video, traders, and may the markets go with you.